start, even though it's still raining heavily, and hopefully we could continue and there is no seizure or disconnection. So we'll start. We'll continue from where we stopped in the last conversation on Saturday, which we looked at the threats to independence. It was a fruitful conversation and the engagement was very encouraging. So let's see how to continue with that. Okay, so let's see how to continue that conversation, like I said, and speaking to the next section, section 3 of, I'm very sure it was unit 1 we were speaking to, section 3 of unit 1, speaking to the threats to independence. Okay, unit 2. All right, unit 2. So we looked at the requirement for independence. We spoke to the threats to independence, and currently we'll be looking at how auditors or chartered accountants are able to safeguard their independence. Okay, so speaking to safeguarding independence is a shared responsibility between the auditor and the firm it's auditing, and generally the profession of accountancy and auditing generally. So the auditors don't have the sole responsibility of safeguarding independence. The audit firm and the company and the profession generally. So speaking to the audit firm that the auditor belongs to, and also the company is auditing, and also the profession, we have a responsibility to safeguard our independence. Independence of mind. Remember, we said an auditor must be independent in his mind first to ensure that there are no biases in his conclusions, and also be independent in appearance, ensuring that there are also no threats to his reporting adequately. So independence of mind and appearance is safeguarded, and the culture of independence in an audit firm is very, very key in achieving and safeguarding the auditor's independence. One of the metrics or the areas to help facilitate, enhance independence is the rotation and engagement partner and also senior staff. We spoke extensively and we also deliberated in the last class. If you're coming for the first time, I believe there are a number of new joiners today. Please go through the last video. We had a fruitful engagement on cooling off period, ceasing to refusing an engagement due to either rotation or timing or circumstances. We spoke extensively to that area. So please go ahead and watch the video again and again so you could glean from what we deliberated and had the conversation on. So the rotation and engagement, the rotation of engagement partners and senior staff in an audit firm, and those that are saddled with the responsibility of carrying out audits, leading audits, taking audits, jobs, are to be rotated frequently. And that's one way to safeguard independence. Rotation of the engagement partner, of senior staffs, managers of audit in an audit firm, whether it's the big 4, the big 5, the big 6, the big 8, medium-sized audit firms, small-scale audit firms. Rotation of engagement partners and senior staff is key and very important in safeguarding our independence as auditors. Also, training and quality control and also consultation procedures are very important also. Training of staff and quality control, we currently have the replacement of ISQCs to ISQMs. So being abreast with these facts, abreast with these changes is very important for audit firms. And consultation procedures with safeguards, with appropriate safeguards and several information to help safeguard auditors from issues of independence should be provided to the firm. So one of the key attributes of ICAN is prompt update, especially in between periods of updates that have been released internationally or locally. ICAN is known for updating its students, its members of such updates globally and locally. So those are areas to help safeguard independence that you don't know. Lack of knowledge is not tenable enough to provide less than quality service to clients. So must always be updated, which is part of our professional competence we spoke to in the last class. Okay, so action to also resolve threats, either simple actions like speaking to those charged with governance, and where it's not fruitful, rejection of appointments are actions that could resolve these threats to independence. And at most also resigning if appointments or engagements have been started. Auditors could resign when the independence of the auditor is threatened. So actions to resolve these threats could lead to simple actions like dialogue, documentation, having those charged with governance aware of what is going on. And even before the engagement, auditors could look at the scenario, look at every circumstance surrounding the engagement, and could reject the appointment because it could impede their independence. Then another action is resignation, where you find out you can't do your job objectively or you are not independent due to various circumstances that has come to the fore, has come to the auditor's notice. A resignation could be the best course of action at that point. So let's take note of this, and it's very important to help safeguard independence of the audit team. And also professional bodies like ICAN, as led by IFAC, enforce these codes. They enforce these codes internationally through standards, through updates, through upgrades, and several platforms to help ensure that the dignity of the profession is kept intact. Very important. Okay, so that speaks to safeguarding independence and the few points and thoughts that permeates around that. Any questions, please? I'll try to run faster. We lost 1 hour to network, and I think the rain is still falling. I'm just hoping you guys can hear me. Somebody should please confirm you can hear me and see my screen. It's actually still heavily raining, and I hope it's...
can hear you, can see your screen, sir.
Oh, fantastic. Fantastic.
Yes,
that's good to hear. All right. Thank you for that feedback. Okay. I believe we would be able to continue with this at least remaining 1 hour we have. Okay. So looking at the next point, like I said, any question? Like we have a very free platform where you can interject freely if a thought strikes, if I shared something that you didn't understand, did not resonate with you. For those joining us, we have a very free platform. Please raise your hands, and if you can't locate the hand key on your handle, please just interject freely, and I will halt to catch your thought and let's address your concern. So it's a lecture, and our lectures are democratic. They are not autocratic lectures where one person just speaks and nobody can say anything. So please feel free to interject if you have any concern and any observation and something you want to share that will help us. We all learn here. We all learn on this platform. So please go ahead and don't stop. Go ahead and engage and halt us to stop and hear you out. Okay, so let's move on to section 4 under unit 2, the provision by auditors of non-audit services. The provision by auditors of non-audit services. Now, we must evaluate as auditors the threats and apply safeguards where possible in the situation where auditors are engaged to perform non-audit services. So appropriate safeguards and appropriate mitigants must be in place to ensure that, of course, auditors can provide non-audit services, but not with audit services at the same time. Must take note of that. So one of the safeguards and one of the cardinal mitigants ICAN has put is to prohibit auditors from assuming management's responsibility. So once you are engaged for an annual or statutory audit, that is what you are to do. So the job of preparation of financial statements and everything that has to do with management responsibilities should not be considered for audit. So the scope and the terms of reference must be abided by. Auditors are engaged for an audit. Don't assume management responsibilities in preparation of financial statements, in ensuring documents and records are available, in ensuring that robust internal controls are provided. So all those responsibilities of management must be left for management. Let's take note of that. And also legal services, recruitment of senior management need careful consideration where auditors are engaged for such. So where auditors are not asked to do statutory audit, they could be engaged for legal services, recruitment of senior management, and other non-audit services. So auditors have to be careful in considering such engagement and ensure that they don't have a job at hand that involves auditing. And also this kind of services are requested by the firm. Very, very important. Also, making referrals is allowed, but with safeguards. Auditors could make referrals to firms they audit, but not with statutory audit engagement. Such engagements are so sacred and they have to be done without any attachments. That's why for statutory audits to be tenable and to have value, it must not be mixed with non-audit services. So if you must make referrals, if a firm engages you or the company engages you to make referrals to help them with recruitment or some specific areas of need, then disclosure of the fee, monitoring of the quality and verification of the staff's independence must be clear. And to obtain clients are generally prohibited in Nigeria. So referral fees to obtain clients are generally prohibited for audit firms. Now, from that perspective of the client asking auditors to provide them with referrals, then from the part of auditors also asking the public or friends or businesses to refer clients to them is also prohibited, where advertising and luring for clients or jobs for auditors, whichever way it is, it's prohibited. So auditors cannot advertise. Auditors cannot get referrals by form of advertising, maybe by flyers, by asking clients to provide them with companies to audit and all that. It's prohibited. Advertising is prohibited and illegal in the auditing space. So whichever way, from the client perspective, the auditor has to be careful, and from the auditor perspective, it's generally not allowed to make referrals. So you could provide your letterheaded and some of your job capabilities to the public, but not go outrightly to seek advertisement and some other inducement to get the job. It's one of the quality control safeguards and mitigants put in place to avoid auditors providing audit services and non-audit services, and there should be clear delineation spelling out auditors not doing both audit and non-audit service at the same time. Very important safeguard, very important. Okay, so that's how short the sections are in addressing some of these key concerns. All right, so any question, any contribution, observation? That will be the end of section 4, as we're trying to run to see if we can meet up with time. We don't want to overflog a chapter, so that we can actually look at questions and answers relating to those chapters to understand how to really pass the paper first. Passing the paper is our primary goal, and I think understanding should be, for application in practice, should be the secondary goal for these exams. Okay, so section 5. we look at making referrals. Yes, Grace, please. Thank you. Nice to have you. Please go ahead, interject freely. You're muted if you're speaking. I can hardly hear you. Please unmute your mic and speak, Grace. And if you're struggling, maybe you may have to restart your handle, or you put the question in the chat box, because we could hardly hear you. I don't know if somebody is hearing her. Maybe my network here because of the rain. I don't know. I'm not hearing her.
No, we can hear.
Okay. Same here too. All right, Grace, we can hardly hear you, so maybe you're finding it difficult to unmute. Maybe restart your handle or put your question in the chat box, and we'll get back to that. Okay, so another subheader or main header is making referrals. We just spoke to that now, but then it's amplified in a separate section, making referrals. And an audit firm, speaking to making referrals, may enter into an agreement with another entity, whereby the other entity agrees to pay a fee to the audit firm by referring clients. So, for example, a software company may specialize in selling accounting software packages or writing bespoke accounting software. It may enter an agreement with an audit firm whereby the audit firm will receive a fee every time that the audit firm refers a client to the software firm with a view to buying a software package or software service. Now, this is allowed with safeguards, the disclosure fee, the monitoring, and the verification of staff independence. So referral fees to obtain clients are generally prohibited in Nigeria. So I think this is an amplification of services. And I think there is a special consideration from what the study text is saying here. An audit firm may enter into an agreement or arrangement with an entity whereby the other entity agrees to pay a fee to the audit firm for referring clients. So, for example, you have an audit software you want, or an accounting package. You want the audit company or the audit firm to help you market to clients that could use them and all that. They are actually agreeable. Such services could be allowed, but then with strict safeguards, close monitoring and documentation, so that when there are external reviews, it's not abused, like poaching for clients or hidden under the guise of getting a client but providing a product in form of accounting software or something. So making referrals as a subheader speaks to the fact that auditors have to be very careful in advertising for other companies when they do their job. So essentially making referrals is prohibited for direct service for auditors, direct service, but the ones that are clearly stipulated or stated with clear agreements, terms of reference, could be allowed, but with appropriate safeguards and monitoring and ensuring that there is no abuse. And that's the essential guide. There is no abuse. Grace's hand is still flashing. Are you okay now? Can we hear you? Your hand is still flashing up, and that is distracting.
Okay, sorry, sir.
Okay,
sorry,
fantastic.
Didn't know my network had issue. I wanted to ask, when you were talking about provision of non-audit services by audit firm.
Yeah.
I wanted to ask that, is it not possible for an audit firm to provide non-audit services to their audit clients using appropriate safeguards, like using separate audit team for both audit work and non-audit work, and then using third-party reviewer or something? Is it not allowed?
Yes, it's allowed. So provision of audit services by the same firm, like the maker and checker you were all aware of, is prohibited. But where an audit firm is preparing, another one is checking, it's allowed, just like you said. Very correct. Very correct. So both one audit firm should not do the two, is what we are saying. And one of the arguments is that currently most big fours have separate departments. So The argument is the Big Fours want to do the audit and non-audit service. And the argument is that most of the Big Four will tell you, okay, we have a team that prepares and also a team that could check under different engagements. So if a team in financial reporting department under one of the Big Four, let's say PwC, prepares the financial statements, another team could audit it. But professional practice, ICAN and IFAC has not approved that. They've strongly frowned at that because it's under the same brand. It's under the same brand. You are the same staff. Of course, there are different people doing the job, but then it's discouraged. So what is encouraged currently in practice is that the firm that prepares should be totally different from the firm that audits, like Grace said. So yes, in answering your question, of course, firms can provide non-audit service, but not at the same time with audit services. Are you okay with that submission?
Very well, sir. Thank you.
All right. You're welcome.
Sorry, sir.
Yes, please go ahead.
This what you just said, is it what is in practice or what is in the book? Because I know some audit firms still provide non-audit services to their audit clients. I just want to understand, is it something that is actually in practice, or is it's just in the book?
Yeah, good question, UK. It's in the book, but then the argument and like I said earlier, the argument and especially by the Big Four, has been presented to ICAN and I think to IFAC to say that we are not the same people making and checking. We have different departments. So you may have experienced or come across a situation where an audit firm does that for a client. But generally in the book, that's not what the book is saying. The book and the current legislation guarding the audit practice around making and checking is clear. So a firm that provides should not be the firm that audit. Of course, it could happen in practice and they will justify it. But then, sincerely, there's no regulation that states that is permissible for now, that I'm aware of anyway. And it's possible, like in my firm, or my former company, they were trying to provide IFRS service for us when they were doing IFRS 9 specifically on this expected credit loss, and they were doing audits. So from the head office, we said, no, concentrate on your audits. We'll provide you with the IFRS issue because the amount for pending receivables was a bit material for them. And they were like, okay, we'll prepare it for you at a separate fee. That's a non-audit service. Prepare it and also audit it. So we were not comfortable with that from our group level. Yeah, we're not comfortable with that. So like you said, it may be obtainable in practice, but generally it's frowned at. And that's essentially to mitigate against anything, the issue of independence. That's the challenge. It's generally found. So there's no regulation that states outrightly they shouldn't, but then people are of the opinion, and generally the practice is that if you are doing audit services, do audit services. Don't meddle into other activities that are income generating. Because I could remember they were asking to do that IFRS 9 computation for us for 5 million. I still couldn't forget. I've not forgotten that scenario. But then our group frowned at it and said, no, we'll do it ourselves. Just do your audit work. So in answering your question, UK is not generally encouraged, even though some firms, the Big Four, have that capacity. Since there are different teams engaged for the engagement, they have the capacity, but it's frowned out. So that may be a potential question. Audit and non-audit services, mostly what is obtainable currently in ICAN's study text and the practice management framework is for you to prepare and you cannot check. And if you check, you cannot prepare. That's exactly what it means. So maybe you share a scenario where, let's glean from your understanding of where auditors provided audit services and also non-audit service. Do you have any practical experience around that?
Yeah, I do, but it's been it's not the big four, right? It's more like
Okay.
the what do you people call? Is it the medium and
Okay,
small and
small and
medium
medium.
audit firms?
Yeah,
Audit
small size
firms,
audit firm.
right?
Yeah.
Uh-huh.
Yes.
So I've had that experience. Though the organization itself was had management staff, right? So
Yeah.
the audit firm, they are involved in the recruitment process of their staff, some of the strategic staff, right? And
Yeah.
they were also in charge of their audit services. They were also in charge of they were at the end of the year, you are supposed to prepare your audited financial statement. The accountant is supposed to prepare the financial statement before the auditors can audit, right?
Yeah.
And give their reports. But
Yeah.
the audit firm ends at doing it by themselves and also auditing it themselves. So I don't see it doesn't make sense there.
Yeah, yeah, exactly. And that's part of you see, the making and the checking there is a challenge. Well, if the accountant has prepared and there were errors, of course, the audit firm can provide adjustments. I agree with adjustments, but preparing it from fresh to start and also scrutinizing it, uh, uh, most of these small firms make those mistakes. And when FRCN comes up after them, if there are issues with such companies, there's always this challenge we are providing. Most small and medium scaled and also small audit firms do this, make these errors in the name of getting fees. You hardly hear of such, even though they propose it at Big Four level, but then it's not rampant. So I think I agree with you. I've experienced one or two scenarios with small audit firms doing that, but it's generally discouraged, actually. It's generally discouraged in practice. You do recruitment, you do audit service, you do non-audit service, all in the name of getting fees. So as chartered accountants and auditors, most of the revenue that comes to most of these small and medium scale firms may be low. And that is why some of them are tempted to do a lot to get these jobs. But appropriate safeguards must be provided to ensure that our independence, the most important thing is the independence we are speaking to, and objectivity. And that is why all these safeguards are provided by the profession, ICAN and IFAC, to avoid any issues that permeate around lack of objectivity and independence. So thank you for bringing that to the fore. And I believe that's part of what we're addressing. If we see a scenario like that in the exam, you cannot permit it. You have to speak to that. You can't provide both audit and non-audit services at the same time. You have to do both of them independently. Okay, thank you so much, UK, for that engagement, and
Thank
also
you.
Grace, for your welcome. Thank you for bringing that scenario. It makes a lot of sense and helps us understand the subject better. Okay, so we've looked at making referrals. Let's look at an illustration, and I would like us to engage here. The illustration is direct from the study text, so let's look at what it speaks to. So speaking to further examples and threats to independence, a Nigerian audit firm, Tire and Sleep, is faced with the following situations. So let's look at scenario 1 or situation 1. Mr. Tire is one of the audit firm's partner. He and his wife has been invited by the managing director of Entity X to a weekend of celebration or celebrations in Cape Town to mark the 20th anniversary of the incorporation of Entity X. Mr. Tire has been the engagement partner throughout this time. Okay, let me go to the scenario again. Mr. Tire is one of the audit partners. He and his wife has been invited by the managing director of Entity X to a weekend of celebration in Cape Town to mark the 20th anniversary of the incorporation of Entity X. And Mr. Tire has been the engagement partner throughout this period. All right. So that's scenario 1, speaking to the issues of threats to independence. So let's look at scenario 2 before we speak to it. The firm has been approached by the directors of Entity Y with a view to being appointed as auditors. One of the firm's audit manager, Mr. Knapp, is company secretary of entity Y, although he takes no part in its management. His parents are the sole directors and shareholders of entity Y. Wow. I'll go through that scenario again. A firm has been approached by the directors of entity Y with a view to being appointed as auditors. One of the firm's audit manager, Mr. Knapp, is company secretary of entity Y. One of the firm's audit managers is the company secretary of entity Y. Wow. Although he takes no part in its management, his parents are the sole directors and shareholders of entity Y. Okay, so let's read in between the lines. The issues are there. All right. So situation 3 or scenario 3. The finance director of entity Z, a private limited company, has requested that only certain staff are to be included on the audit team to prevent unnecessary interruption to the entity's accounting department during the period. In particular, he has requested that David, who has been the accountant in charge of the audit for the last 2 years, be assigned to the audit, and that the team contain no new trainees. So are required. What threats to objectivity are presented in each of these situations or scenarios, and how should the audit firm deal with them? Fantastic. I love these scenarios, 3 of them. They are practical scenarios, and what could be presented in the real exam. Could just change some wordings, and the scenario is direct from the AAA study text. Okay, somebody wants to speak to that, any of the scenarios? 1, 2, 3. All right, let me hear your thoughts, please. Looking at the requirement states situation 1. Oh, thank you, Muziat. I think I'm seeing Muziat for the first time. So, Emmy, go ahead, speak freely. Which of the scenarios do you want to address? Okay, AA, let's hear Muziat first. Emmy, go ahead first. Please unmute and speak. Thank you.
Everyone.
Sorry, I can't hear you. I'm struggling.
Good evening. Can you hear me?
Yes, good evening. Good evening, Emmy. Nice to have you on the call.
Thank you. I said scenario 1.
Okay, yeah, please go ahead. Scenario 1 is on the screen.
Yeah. I think what's it? The threats, one of the threats we have here is familiarity threats.
Yeah.
And this thing, like, there is this thing called rotation. It has been the audit. It has been auditing the firm for 20 years. That's when since the firm has been in establishment. And I think there's a rule that 3 years or 5 years, you're supposed to rotate the auditors to prevent the risks of familiarity threats. And also for taking Mr. Taya and his wife to Cape Town, if you are to receive gifts or whatever from your clients, it should not be material to you and it should not be material to the client. So this trip to Cape Town is actually material to both the client and the audit team. So this scenario, it has familiarity threats, and it also have the thing involved in it is material, and also there's rotation. I don't know how to put it. There was no rotation.
Yeah, there's no rotation of audit partners. Yeah, I align with your submission. Thank you for engaging, and thank you for bringing those thoughts. They resonate with me. Okay, AA, let's hear you. AA, which scenario do you want to speak to? Is AA, are you there? AA number 2, not AA number 1 now. Your hands were up. I hope she's still on the call. Yeah, she's still on the call. So Aisha, please go ahead. You are trying to speak to a scenario. Your hands were up. Okay, maybe she's struggling with her network. All right, somebody else wants to speak to the 2 scenarios remaining. I think the first scenario has been spoken to by Emmy. So The second scenario, will anybody like to speak to this second scenario? The firm has been appointed by the directors of entity Y with a view to being appointed as auditors. The firm has been approached by the directors of entity Y with a view to being appointed as auditors. One of the firm's audit managers, Mr. Knapp, is the company secretary of entity Y. Although he takes no part in its management, his parents are the sole directors and shareholders of entity Y. So for scenario 3, what are the threats to objectivity? And what threats are present in each of this current scenario, and how can the audit firm deal with the threat? So I'm waiting for us. Yes, please.
Let me give my thoughts.
Please share
on the scenario 2.
Okay.
We have threats to auditors' independence, because when you say one of the auditors is a secretary to the company who has approached the audit firm to be their auditor, if the audit firm accepts such an engagement, and eventually the auditor who happens to be the secretary of the company happens to be among the audit team that would join that would do the audit.
Yes.
He would be forced to hide some certain things, especially when the company is not doing well.
Exactly.
Then he also has a familiarity threat, because they said his parents are also sole directors of the company.
Yeah.
Exactly. So there is familiarity threat there. There is a threat to his independence there.
So can you speak to the fact that he's one of the audit managers, but currently he works with the company as the company secretary? Take note of that. He's not involved in management duties. What can you say to that?
But the fact is, in as much as he's
okay, let UK land. Yeah, you can come in. Yes, go ahead, UK.
To me, in as much as he's not part of the management decision-making body, but he's a secretary to the management, to the company. So that is a vital position.
So he should not be involved. Are you of that opinion?
It's either if the company, if the audit firm is accepting such an engagement, he shouldn't be part of the audit team. It's either they don't even accept it entirely, or if they want to accept it, he shouldn't be part of the audit team.
Yes, I agree. I agree with you. Okay. KU wanted to say something. He wanted to comment. Please, KU, please feel free. The floor is yours.
Yes. Just to add a little more flesh to the last speaker's point, I just want to talk about the independence, because you seem to draw a line on that, being a company secretary, and at the same time, he's not involved in any managerial decision taking. Well, the point here is that the point on independence is independence of mind and appearance.
Yeah.
Yes, he might not, or she might not be taking any active role in anything that has to do with decision making or decision taking. Yeah. But then people outside seeing that he's the secretary might not know that he's not taking any position, any decision-taking position. So we're talking about independence in appearance here. Independence in appearance.
Yes.
And that is stress. That is no matter what, people out there will not believe what we are saying, that he's not taking any decision function or anything like that. So,
of course,
talking about independence, it has to be independence in mind and in appearance. That's just what I wanted to add there.
Absolutely, I agree with you. I agree with UK. I agree with your thoughts on that. Absolutely. Okay, so let's look at scenario 3. Somebody should speak to scenario 3 before we round up these perfect scenarios. These are examples that are examinable. So let's speak to them. Speak freely, please. Speak freely. Like I said, there's no stupid answer. There's no intelligent answer. We're all sharing knowledge and rubbing our minds together. Somebody could say or share something that would help you to write, and you see it from a different perspective. So someone should speak to scenario 3 freely. What are the threats? What are the threats? The financial director of Entity Z, a private limited company, has requested that only certain staff are to be included on the audit team. The finance director, just imagine, to prevent unnecessary, what's the next slide saying now? Just hold on, I think my slide has frozen. Okay, prevent unnecessary interruption to the entity's accounting department during the audit. In particular, he has requested that David, who has been the accountant in charge of the audit for the last 2 years. Wow, David in charge of audit for the last 2 years, be assigned to the audit, and that the team contain no trainees. Wow, so the finance director is the... Okay, so what's our thoughts on this third scenario? This one seemed to be more serious than the first two. What are our thoughts on the threats to objectivity and the situation around this scenario? Anybody wants to share? Or anybody want to speak to it? Is AA back? AA, can you speak now? You were trying to speak that time. Your hands flashed up and I think network.
Oh, yes, I'm back.
Oh, okay.
Sorry.
Okay. All right. Okay. So which scenarios or situations did you wanted to provide some thoughts on any of the scenarios?
I wanted to speak on scenario 2. Well, I heard Mr. Keller and
UK.
Yeah, they were speaking on it. But can I give an attempt on scenario 3?
Please, very well. Please go ahead.
Okay, I think my own view, I think intimidation threats is there, and then self-review threats. Self-review threats in the sense that David, who is the finance director, is also in the audit team because they've prepared he's in the account section. Like they've prepared the accounts for the company. I don't know if I'm making sense.
Sure. You are.
And
please go on.
What's it called? Intimidation threats, because for them selecting particular people to go in for that to avoid to prevent unnecessary interruption of
the audits.
So perhaps, I don't know, like they may be influenced in one way or the other to be like, these are the things you have to say or to check.
Of course.
Just a vague answer.
Yeah. I agree with your summation. So self-review, intimidation, threat, they are part of it. Of course, I agree with those submissions. Any other thoughts on scenario 3? I think scenario 3 seems to be the most serious out of all of them. Okay, thank you for sharing your thoughts. And I deliberately did not put the answer from the study pack here. So please go back and read it so that we can share our thoughts, not just regurgitate or take hook, line, and sinker what the ICAN study text has said. So you can still go back and look at the opinion of the ICAN. Okay, yes, please. I'm having 2 contributors, engagers. Okay, let's have Temi. Temi came first. TE go first, then we have Hassan second. All right, please, Temi, go ahead and speak freely.
Yeah, good evening.
Yeah, evening. Nice to have you.
Scenario 3.
Okay.
I can sense something like integrity threat. Then I can smell something like covering fraud and error. I mean fraud, exactly like fraud. For the finance directors will have said David should be in charge of auditing, and without allowing any new training to join the audit team. So in my opinion, I'm smelling like there's something between the finance director and David that they're trying to cover up. So that's my little contribution to scenario 3.
Okay. Thank you very much. So, in speaking to questions, assumptions are allowed, but you have to be careful with capitalizing. So, deal with the scenario based on what is presented to you. So, bringing in fraud and error, and also speaking to threat of integrity is maybe off point a bit. So, there are no threats to integrity, but there could be lack of integrity. So, we have 5 threats. So when providing context in writing, so the examiner doesn't mark you down, you have to provide context to your words. Of course, we're allowed to assume, but then you could say lack of integrity is part of what you are assuming from the scenario between the finance director and David. But then in speaking to threats of objectivity and how you handle it, yeah, you need to speak to that answer. So the requirement, based on your assumptions are tenable. I agree with your assumptions, but you will need to address the question by speaking to the threats and how you will deal with them. So if I'll ask you how you will deal with this threat as the audit or the audit firm, how will you deal with it if you're in the engagement partner and it comes to your attention? Because you didn't speak to that. Would you like to share some thoughts on that, how you will deal with it? Yeah, to me, your hand is still up. Would you like to share some thoughts on that?
No.
Okay. Thank you very much for the initial thought. We appreciate it. Okay, so Hassan, go ahead. You're trying to speak.
Yes, good evening, everyone. Can you hear me, sir?
Good evening. Yes, well, very well. We can hear you now, finally.
My take is that on the issue of the threats, to me, scenario 3 seems to have almost like 4 threats. Aside intimidation, aside advocacy, the other ones are involved in scenario 3. For instance, for the finance director to say that so and so person must be in the audit team, it itself is an intimidation on the part of the audit team. So then for David, I think there is also a familiarity trait there, because they said his parent or so that are sole directors in the company.
Okay, that's for scenario 2. Scenario
3,
2.
I think it's 3. Is
Okay,
it 3?
3.
I think
No, I think it's 2.
Directors.
Yeah, sole directors is 2, scenario 2. His parents are sole directors, Mr. Knapp. Yeah.
Oh, okay.
Yes, Mr. Knapp.
Then I can see also self-review because the one of the audit partner is part of the accounting department.
Yes.
Or is part of the, I think that's it,
Yes,
so it's also that one also has to do with self-review, because if it happens that he will be part of the audit team, definitely the work he has done will also going to be reviewed by the audit team. So it's more or less like a self-review threat. Yeah. So I think these are the 2 or 3 threats that I can be able to identify in the scenario 3. In scenario 3.
Okay, thank you very much for that.
On the issue of
how you deal with them.
How to deal with them. I mean, the safeguard.
Yes.
I think the first thing to do is that for the audit team to let the director of finance know that it is not his job to select who will going to be part of the audit team.
Exactly.
Because if he does that, it means that they will not going to be independent. So they have to tell him that it is not his job to tell them who will be on the audit team.
Exactly. Then, absolutely.
Secondly, those people that he mentioned, the finance director mentioned, should not be part of the team. They should be replaced by other team members.
Yes.
So then, lastly, I can say if that will not work, it's better for them to decline rather than to do the job. I think these are some that they can apply.
Exactly. I align properly. Thank you very much for sharing those powerful thoughts. Thank you. I mean, addressing such questions, most of us spoke to the threats, but then we didn't speak to the what you will do. So remember, it's a double-barreled question if it's presented. They said the threats and how you should deal with them. So please take note of such questions for scenario 1. We spoke to the threats, but we need to speak to how to deal with them. So if you answered situation 1, I know somebody spoke to situation 1. Can you tell us what to do? Hassan provided us a roadmap with scenario 3 on what to do to ameliorate the situation. So situation 1, how do you, Mr. Taya is one of the audit fees, be invited for celebrations in Cape Town. So should he decline? Should he go ahead? And he's been auditing throughout the time of the engagement, or let's say the 20th year or the 20th year of existence of the company. So as the audit firm, how will you handle such? Who can provide what to do in such situations? Practically. Can somebody speak to that? What you do in situation 1? What should be done? Anybody?
Yeah,
okay.
Yes, please. He should simply decline the invitation to enable him give an objective opinion. Okay, then he should also start looking at the need for rotation, because he has been so long there. His familiarity is already in serious threat. He has been auditing the company for our 20th anniversary, and he has been there all this while as the auditor. He's already wrong. He's already wrong ethically. So he should start considering rotation.
Ceding it to another partner or another firm.
Another firm entirely.
Yeah. I agree with you, Grace. Okay, Emmy wants to speak. Mizat, please go ahead. Your hands are up, Emmy. Go ahead, please. Speak freely. Thank you.
You fire him. Not regret. I think they should fire him.
Okay, they should fire the auditor, right?
Yes.
Okay, so who is going to fire the auditor now?
If they rotate him, he's still going to come back, and he's already familiar with it. 20 years is it's very, very long.
Okay, so he should be stopped totally, not to even work with that firm forever.
Yes.
Wow. All right, incredible submission. Okay, so I think 2 thoughts. Aisha raised her hand to AA. You want to say something to that scenario 2?
No, Grace has actually said it all for me. Is to advise that they rotate and also decline the gifts, the trip to
Okay. All right. That's fine. Okay. I think somebody spoke to situation 2, and it's fine. Okay, so let's have a safe landing on those 3 scenarios. So number 1, what are the facts of the case in answering such scenario-based question? The fact is that this is the first situation. Let's look at the facts of the first situation. And you will see that the first situation speaks to Mr. Taya, and he's an audit partner invited along with his wife to an all-expense-paid weekend in Cape Town by the MD of Entity X. And he has been in the engagement, or he has been the engagement partner for 20 years, which we've stated very, very clearly. So what are the threats? In my view, there are 2. Number 1, familiarity threats. And speaking to familiarity threat is the long-standing relationship with the client for over 20 years, and it may impair objectivity. I don't want to use the word will, but it may impair objectivity. We've said that, and I agree absolutely even with MA's submission and that of Grace. Then the second one is the self-review threat. Accepting significant hospitality. Sorry, not self-review, I beg your pardon. Self-interest threat. Self-interest. Accepting significant hospitality or gifts could create a sense of obligation to return the favor. So that hospitality of the trip is a self-interest threat. So what are the actions and safeguards? Decline, like we've said that 1 or 2 speakers said, decline the Cape Town trip, especially if offered for free. to avoid the appearance of compromised independence. Yes. So that's the action to take. So let's focus on the action. Look at the facts, state the threats, explain them briefly depending on the mark that will be provided or the instruction. If it says discuss, let's look at what the request is. Please take note of the action word. What threats? So when you hear what, it means you should describe situations and how should you. So you can't just state now or list. You have to describe what to do. It may be succinctly, not too much story, but then hit the nail on the head, what to do. So if you're asked to discuss, if you're asked to evaluate, so you have to provide context. So in speaking to what to do, be very direct. I would decline the Cape Town trip, especially it's offered for free, to avoid the appearance of compromised independence. I think Keller said that. And the second thing I'll do in this first situation is to rotate the engagement partner. Yes, we have said that very expressly. As long-term association exceeds recommended limits, mostly for public listed companies and public interest companies. So a lot of us spoke very practically to that on what to do. And what I'll do, the last thing is, if rotation is not possible for non-public interest entities, they should introduce a second partner in that same firm to review or independently control the work that partner. So if it's not possible then for rotation, another partner should take over the review and independently for quality control purpose. So that's another safeguard that could happen. But the first and primary thing is to seed that engagement. And I know 20 years is too long. Yeah. So those are my thoughts, and it aligns with what most of us have contributed. Yes, please, Oluwaseyi, go ahead, interject freely.
Okay, sir. So thank you, sir. I just want to ask a question based on this scenario one. So I want to ask if there are penalties. I mean, in maybe in the books and practically in real life, maybe there are penalties to this type of situations or scenarios, because I want to believe that we have audit firms that have served or that have been an engaging partner of a particular firm for over the number of years that is ideal, maybe 3 or 5 years. So is there a penalty or are there penalties for these audit firms, or we just need to advise them and we just the advice is just that we should not, that an audit firm should not, outside that should not. Is there any penalties for it, sir? So that's my question, sir.
Okay, fantastic question. So in practice, especially with the IASB, a code of ethics that provides guidance for us, staying too long with the same client triggers rotation requirements, but the penalties depend on now our jurisdiction. Okay, yeah, UK wants to say something before I speak to Shei's question.
No,
yeah, UK,
sir,
go ahead.
I want to ask a question.
Okay.
I want to ask a question. If this scenario was to be turned around a little bit, let's assume that this trip was supposed to be for a trip that a meeting that was organized by the company, that is meeting of shareholders that was organized by the company to Cape Town or whatever, of which the one of the rights and duties of the auditor is to be notified of audit meeting, annual meetings, and attend and speak in those meetings. Now, if this is the scenario, is the auditor allowed to go for these meetings, irrespective of the fact that he has served them for 20 years?
Okay, fantastic question. All right, thank you for bringing that. I'm sure it struck you, and good thought for interjecting. Okay, so let me address Shei's concern, then I'll come to your question. Duly noted. Okay, so staying too long, like I said, with the same client triggers rotation requirements, but the penalties depend on jurisdiction and whether the entity is a public interest entity. So take note of that, public interest entity. Now, For public interest entity, speaking to listed companies, regulated financial institutions, and insurance companies, the law and the rotation rule says an engagement partner should not stay maximum 7 years on the same public interest entity client, followed by a cooling off period of 5 years before returning. So maximum you stay as an engagement partner is 7 years, and you have a cooling off period of 5 years before you come back to that partner to avoid familiarity. Then for key audit partners, like external quality control reviewers, partners, also are subject to the same time, max 7 and cooling off period 5 years. Now, if you stay beyond that limits based on FRCN's Act and the SEC rules and the CBN, the consequences are regulatory sanctions or fines from these 3 notable entities. So if it's a bank, it will come from CBN. If it's a public company, it comes from FRCN and SEC. And specifically, possible suspension from the register of accredited auditors for public interest companies. So FRCN has the register of accredited auditors from audit firms. Also, ICAN's disciplinary action for breach of professional ethics, and it could range from reprimand, warning, to seizing your license, your practicing license. So you can see these are clear. Then also loss of eligibility to audit public interest companies or entities until compliance by your firm is restored. So you see these 4 sanctions, they are very stringent. So that's what is stated in the Act. So number 1, regulatory sanctions or fines from FRC, SEC, or CBN if it's a bank. Then for consequences, speaks to possible suspension from the register of accredited auditors, depending on the gravity and non-compliance to these rotation rules. Then ICAN will also be informed, and they too can come with warning or seizing their license from that firm or from you as a practicing person. Then also loss of eligibility to audit public interest entities until you've restored compliance. So that's in the study text in chapter 2, regulatory environment. You could go back to that to reinforce your knowledge. Then for public or non-public interest companies, non-PIs, there's actually no statutory maximum, but the threats to independence, speaking to familiarity, must be evaluated and safeguarded by the auditor's judgment. So if a partner, for example, stays, 20 years, it may be viewed as breach of objectivity principle. If no safeguards or rotation independence review are in place, penalties here are more about disciplinary measures from ICAN itself if it's reported to the body or the professional body of that regulates that profession, if found compromised or found to lose the client's confidence. So non-public interest companies are like small companies, small and medium scale companies. This may not be reported like that, like the public interest, the public listed that are big and all that, banks and so on. Then in the Nigerian context, the SEC, our Code of Corporate Governance that is 2018, then SEC's own of 2023 updated, mandates rotation of external auditors for listed companies every 10 years. And with a cooling off period of 7 years. So that of 7 and 5 is for key audit partners. But for companies, max is 10 years at firm level, and you cool off for 7 years before coming back to that company. Then for CBN guidelines, we have the bank's audit firms rotate every 10 years with another cooling off for banks of another 10 years. So it depends on the sector. And SEC has their own, then FRC and also have their own, even though most of them are closely related. But the FRC and ICAN bylaws, breach can actually cause fines. So yes, in answer to your question, there are fines, sanctions, or even withdrawal of license for a period of time or forever, or even disaccreditation of that. So in practice, if an auditor stays 20 years with a listed bank in Nigeria, CBN could reject the appointment outrightly of that auditor and impose monetary fines on that auditor, publicly even blacklist the firm for PIE's audit. Yes, CBN could do that. ICAN could also openly discipline that audit firm for case of breach of professional practice. So it's a grave offense. It's not to be swept under the carpet. There are laws and there are sanctions that follows any breach of any of these laws. I hope you are okay with that, Olushi. Are you okay with that?
Yes, sir. Very much okay, sir. Thank you very much.
You're welcome. Fantastic. Okay, so in addressing UK's question, yes, so an official engagement is official. So if the board is saying we are flying to so place for our AGM, of course, the rights are used, like you said, the rights and duty of auditor, you have to be there, and you can decide not to be there also. So if you're going, it's official. That has nothing to do with one-on-one, like the scenario here, that he and his wife are only invited, Justin and his wife, for a private celebration, not official engagement. So good, a scenario could be painted differently, like you said. So that's official. You're all going with the board, and it's an official meeting. It has nothing to do with one person. So it's an official and approved by the board. So the auditors can be there. It's legal, it's okay, it's formal, no challenge. Okay, so are you okay with that, UK, that thought?
Yes, sir, thank you.
Okay, fantastic. Please allow us to land at least. Let's complete this scenario, then we close. We didn't start early. Network did not allow us. So maybe give me some 4 or 5 minutes. Let's land on this scenario before we shut down. I know Monday has been crazy at work, but we'll close very soon so we can rest. All right, so the engagement was fruitful, and that's because we are preparing for such scenarios, which is what will come mostly with this new dispensation. Okay, so I haven't spoken to the familiarity threat and self-review. My other thoughts on this second situation is also the same as spoken. The facts are the firm approached to, where's the second scenario now? Okay, yes, the firm approached to audit entity Y. So Mr. Knack, one of the facts is the audit manager in the firm is also the company secretary of the entity Y. It's a fact. And also his parents are sole directors and the shareholders of entity Y is another fact. So what are the threats? In my opinion, 3. I think somebody gave 3. I think either Hassan or who. The speaker spoke about 3. And number 1 is self-interest, which is close family relationship between the auditor's staff member and the entity's management. See, that's a self-interest threat. You're in the audit team and you're also in the entity's management. So, okay, I think it was Keller that said, whether you are making decisions or not, the public will not see that. And I agree with him, absolutely. So that's a threat, number 1. Number 2, familiarity, close personal relationship with the key management, good bias judgment. Yeah. Familiarity threat, and a candidate spoke to that. Very impressive. Also, advocacy threat. Somebody said advocacy. Being the company secretary could be seen as promoting the client's interest. Could be seen. Remember, Akela said independence of mind and appearance. Very key. So what will I do? Actions the firm should do to take action safeguard. The firm should not accept the engagement in the first place because the threats are so significant that safeguards are likely to reduce them to an acceptable level. So the firm should not accept the engagement. And somebody said that expressly. I think it was somebody that said we should even remove them from the engagement. Yes, I agree with that submission. Then the action is, another action is, even if Mr. Knapp resigned as company secretary, I think the close family control of entity Y still poses a high risk. Yeah, it's close control of the entity. So resignation as company secretary should not even allow him at the same time to audit that company. He should resign, not accept the engagement, cede it to another person. Then the best safeguard, in my opinion, is to decline appointment. Decline appointment to preserve that independence. All right, so that's scenario 2. You could still read the answer in the study text to glean 1 or 2 more thoughts. Then finally, before we go, scenario 3. Scenario 3. Hassan spoke to that extensively. Scenario 3. I think the facts are the finance director of Entity Z requests specific staff, David, and no trainees in the audit team. That was his specific instruction. And also David has been lead accountant for 2 years. So what are the threats? 2. Familiarity threat, in my opinion, and intimidation threat. And Hassan spoke to that. So familiarity threat is the same staff on engagement repeatedly may become too close to the client. The second threat is intimidation, the client trying to influence audit staffing decisions. Hassan said that unequivocally. So the actions, the auditor must retain control over staffing decisions. Yes, somebody said that it is not in his place to be directing. So they need to explain to the finance director that the team selection is an internal matter at the audit firm, not the client's business. Also, rotation of some staff members to maintain objectivity and bring fresh perspective. Hassan said that, and I think somebody else said that. Then also consider maintaining David for continuity, but add other team members to reduce over-familiarity risk. Yes, David has experience and all that, but add other members so that there will be nothing fishy that the finance director is in, only him. And also document the client's request and the firm's response. So every correspondence should be documented and passed to the team and also the... So in summary, the first scenario speaks to familiarity, threat, self-interest. So recommended action, decline the trip, rotate the partner, add independent review. So then number 2, the second scenario speaks to self-interest, familiarity, and advocacy. Decline the engagement entirely. That's the safeguard and recommended action. And finally, the third situation is familiarity and intimidation. Review the recommended action. It's retain staff control, not the finance director now should be dictating. So the audit firm should retain their staff control, rotate some members, and also document the response from those charged with governance that they are in charge, not the finance director. Okay, so fantastic scenario presented, fantastic engagement, and shows we are really abreast of the facts and we understand some of the responses to provide under exam condition. Okay, so I think we'll have to stop here, and in the next class we'll need to run faster. I don't think there's any scenario again. Okay, so in the next class we'll start with unit 3, which is confidentiality and conflict of interest. That should be possibly on Thursday by God's grace. So let's also, I would suggest go back to the study text. I didn't bring the answer from study text so that we can provide context, not just read textbook situation. Like UK said, it could be twisted.